The idea of eliminating federal income tax has exploded into national conversation. After President Trump stated that tariff revenue might eventually grow so large that Americans would no longer need to pay federal income tax at all. This is a bold claim, one that has left millions wondering whether this represents a genuine direction for future U.S. tax policy or more of a political message designed to influence ongoing negotiations. For many households, especially Social Security beneficiaries, low-income workers, retirees, and families living paycheck to paycheck, the thought of removing federal income tax sounds like immediate relief. But the key question is simple. Is this truly possible? And if so, how would the United States replace trillions in revenue? Before we break down the numbers, we want to hear from you. Do you think eliminating federal income tax is realistic? Or do you believe the government depends too heavily on this revenue stream to ever remove it? As we explore this topic, we will look at what President Trump said, where the revenue would supposedly come from, the actual math behind federal taxes, and why economists are both excited and skeptical. We will also examine the confirmed changes already in motion, such as no tax on tips and overtime, and what they mean for workers in 2025, 2026, and beyond. If you find value in videos that break down Social Security, taxes, refunds, and benefit rules with clarity, logic, and facts, make sure to like this video and subscribe to a Social Security Post. And remember, if you have any questions, drop them in the comments so we can answer them in future videos. President Trump's statement was unusually direct. He said the government is taking in literally trillions of dollars from tariffs, and that the incoming revenue is so strong, the administration could eliminate federal income taxes entirely or reduce them to extremely low levels. He also claimed that next year is expected to be the largest tax refund season in U.S. history, driven by new tariff-based refunds and what he called dividends to the American people. According to his remarks, tariff revenue would be high enough that income tax could become unnecessary, optional, or kept at very low levels, just for fun. This idea suggests a fundamental restructuring of how the government funds its operations, moving away from taxing work and wages and toward taxing imports and consumption. However, even within the administration, the proposal is being treated more as a conceptual direction rather than an executable plan. The statements appear to be part of a larger pattern, releasing big, attention-grabbing ideas to see which ones gain public momentum. Trump has already successfully passed the no tax on tips and no tax on overtime provisions, which became law through the One Big Beautiful Bill. These actions indicate that while eliminating all federal income tax may be a stretch, targeted tax reductions tied to wage categories or certain incomes are absolutely within reach. The administration may be using these early wins to build support for more aggressive tax reform in 2026. To understand why eliminating federal income tax is so challenging, we must look at the actual numbers. Federal income tax generates approximately $2.7 trillion per year, making it the single largest source of government revenue. These funds pay for Social Security Administration, Medicare operations, the military, national security, federal agencies, infrastructure, disaster response, and hundreds of federal programs. In comparison, tariff revenue brings in around $195 billion, which is less than 7% of what federal income tax produces. Even if tariffs doubled or tripled, something economists say would raise consumer prices significantly, they still wouldn't approach the $2.7 trillion needed to replace income tax revenue. Beyond the financial shortfall, there are political barriers. Eliminating federal income tax would require Congress to rewrite the tax code, restructure federal budgeting rules, and potentially introduce a replacement tax such as a national consumption tax or a value-added tax. This would be one of the largest legislative overhauls in American history, requiring overwhelming support in both chambers. which analysts say is not present today. Even members of Trump's own party are divided, with some raising concerns about inflationary effects, trade relationships, and the risk of relying heavily on tariff revenue, which fluctuates with the global markets. Because of these factors, experts generally agree that completely ending federal income tax is unlikely, but targeted reductions and new rebates are very possible. While eliminating the entire federal income tax system remains uncertain, what has already changed is extremely significant. Beginning in tax year 2025, employees who regularly receive tips, such as servers, bartenders, cleaners, hotel staff, delivery workers, and other tipped industry workers, can deduct up to $25,000 in tips from their taxable income. This means that for many workers, a substantial portion of what they earn in tips will no longer be taxed at the federal level. The Treasury Department is required to publish an updated list of eligible occupations based on who customarily receives tips, ensuring clarity for millions of workers. Additionally, overtime pay is now federally tax-free through 2028, a change that directly benefits millions of hourly workers. However, these benefits are not universal. The deductions begin to phase out by $100 for every $1,000 of income above $150,000 for individuals and $300,000 for joint filers. This means the tax savings are aimed at middle and lower income workers rather than high earners. These two changes alone could significantly increase the take-home pay and tax refunds for millions of Americans beginning in 2025, marking one of the most meaningful wage-based tax adjustments in decades. One of the most overlooked issues in the debate about eliminating federal income tax is its impact on Social Security. Analysts warn that removing federal income tax without a fully established replacement would worsen the trust fund insolvency expected in December 2032, when Social Security would face an automatic 23% benefit reduction for roughly 72 million beneficiaries. While income tax and Social Security tax are different revenue streams, major tax reductions without corresponding increases elsewhere could intensify the funding crisis. This is why many experts call the idea of eliminating taxes on Social Security benefits unwise. The system already faces a large funding gap without adding additional pressure. There is also the broader impact on the federal budget. Income tax revenue supports Medicare operations, defense, veteran programs, disability operations, and hundreds of federal services. Tariffs, even if expanded, cannot currently fund these systems. Analysts highlight that relying heavily on tariff revenue introduces volatility because tariffs depend on international trade volume. If trade slows, so does revenue. Additionally, replacing income tax with tariffs could raise prices on consumer goods, impacting low-income households the most. For these reasons, experts believe complete elimination of federal income tax is off the table, but structured tax relief, like refunds, deductions, and temporary exemptions, will continue expanding. While full federal income tax elimination is unlikely, bigger refunds in 2026 are absolutely on the table. Economists close to the administration, including Kevin Hassett and Scott Bessent, have stated that 2026 could be a tax refund bonanza due to expanded tariff rebates, new deductions, and the no tax rules already implemented. With so many tax changes kicking in at the same time, tips deductions, overtime exemptions, tariff refunds, the combined impact could create the largest refund season most Americans have ever seen. This means families may see significantly higher refund checks even without eliminating income tax entirely. At the same time, the national conversation is shifting toward alternative tax structures, especially consumption-based taxes. Some economists argue that taxing spending rather than wages encourages work, productivity, and investment. This mirrors systems used in several other countries where income taxes are lower, but consumption taxes are higher. While no official proposal has been announced, Trump's repeated public references to tariff-based tax systems suggest that the administration is exploring long-term replacements for the traditional income tax model. For now, the biggest and most certain takeaway is this: Americans should prepare for major tax refund changes in 2026, even though total elimination of federal income tax remains unlikely. Thanks for watching Social Security Post, and I'll see you in the next video.